Hi friends, welcome to our latest episode on the US stock market and a guide for investing. Today, we'll take a look at 5 strategies for beginners in the game of investing. For starters, if choosing the right stocks can be confusing, then picking the right strategy can be even more demanding. Don't worry, we are here for you. If you listen attentively, you'll notice that all these strategies have one thing in common: their ability to narrow down to one stock at a time. This stock can be identified after reading the market trends, some research, testing your knowledge, then executing your strategy before finally investing. So let's understand the different strategies first, after which you can decide what suits you best. Shall we begin? First up, buy the index fund. If you'd like to be spoon-fed with returns without getting neck-deep into investing, then Nasdaq Composite or the S&P 500 is for you. Essentially, they are an assorted collection of the top-performing stocks from the US stock market. Yes, just like the Indian BSE or Nifty. Investing in them is low risk because here you are the market instead of trying to beat the market with individual stocks. To start investing in indices, all you have to do is choose the right index and buy a fund based on it. Second in our list is income investing, where the idea is to put the money on stock which increases your share value and also gives regular returns in the form of hard cash called dividends. This strategy develops a perspective on returns, instills reward-based confidence, and motivates one to hold on to a stock, an ability which is key to successful investing. You can pick dividend stocks from index funds or dividend ETF for investing in some of the expert recommended stocks. Next on the list is Contrarian Investing. Quite a tongue twister there. Contrarian investing is a type of investing where one goes against the market trends. That is, buying when others are selling and selling when others are buying. The key here is timing. Did you know? A fun fact. During the Great Depression, John Templeton bought 100 shares of each company that traded on the NYSE for less than $1. That bold move made Templeton a very wealthy man after a period of time. You could use this strategy to identify stocks from industries which have been most affected due to the pandemic and ones that will pick up in the future. Now, we'll look at an investment strategy which has inspired some of the top investors around the globe, including our very own Warren Buffett. Yes, Warren Buffett became world famous after investing in value stocks, a strategy he adopted from the book Intelligent Investor. Value stock investing is an approach where stocks are bought below their intrinsic value. Key here is to identify stocks which have depressed over time but hold potential for the future. Put simply, this strategy is all about सस्ते में खरीदो और बढ़ते दाम में बेच दो. Finally, we'll look at a strategy that challenges Warren Buffett's value stock investing. It's called growth stock investing. तो क्या होता है इसमें? This strategy dismisses the idea that buying stocks at an undervalued price would give much returns, as a stock which depreciated by 50% would only double in price once it reaches its market threshold, right? On the other hand, investing in growth stocks is about identifying companies which registered more sales and profits than the overall market and will continue to do so in the long term. You see, short-term growth can be risky and involves bouncing from one stock to the other for investment, whereas investing in hand-picked companies with quality management offers long-term returns and growth where sky's the limit. These are some of the strategies you can use. Now, before you invest, decide the right strategy based on availability of funds, duration you'd like to hold on for, and your style or nature of investment. You can also begin by downloading the Stockal app available on iOS and Android. We look forward to having you with us for the next episode. Until then, take care.